For the Chewy bag holders, good news. Prices are off the lows at about $16.63. This is a beautiful setup. Setup I like taking, where you have two demand wicks in this case, buying wicks, and then you have that third one that opens, comes down, and then rises higher. A lovely setup. It's not the only good news for the bag holders. Morgan Stanley thinks that pricings can go a little higher. Let's get into the article. Morgan Stanley analysts upgraded shares of Chewy to overweight from equal weight, lowering the price target to $28 from $31 per share in a note. The analyst told clients that with the stock declining more than 50% since mid-July on total addressable market saturation concerns, they believe the move is overdone as discrete macro headwinds have played an unappreciated role. According to our analysts, Chewy is still gaining market share on both a revenue and customer basis. Although the pet macro remains weak, we see an attractive combination of better than expected revenue growth and ongoing margin expansions paired with a reasonable valuation. Our analysis suggests that the pet industry macro has posed a greater headwind to Chewy's top line growth than the market appreciates, but may be bottoming. They added, we believe the pet macro may be bottoming as pet household penetration has already returned to pre-COVID levels despite positive demographic trends as Gen Z and Millennials have higher rates of pet ownership. The analysts also noted that pet food price inflation is cooling quickly, which should limit a further shift from premium to value, and Chewy's hard goods segment has returned to growth in Q2. The firm believes the worst macro may be in the rear view mirror, potentially leading Chewy to reaccelerate customer gains in fiscal 2024. All right, now going back to the charts. Look for resistance to come in at the $24 level. Why? Because that was previous support on two different occasions. Let's scroll down to the weekly chart, and you can see price is bumping its head against the 13 simple weekly moving average. However, we are on Tuesday, and it's still early in the week. Had a nice gap higher last week at the $18 level, and according to the chart, there's no real selling levels until you get to that resistance support band at $24. Let's put a line there to denote where one might take some profits off the table. All right, we're going to go down to the daily chart. And what you can see is you had recently had a crossover between the 13 and the 26 day moving average. You did also take out the most recent pivot highs. So here's the setup on a shorter time frame. Again, on the weekly chart, price is hitting that 13 simple weekly average. So I'm anticipating price pulling back before moving higher. Why the $19 level? Again, that was short-term resistance, which should serve as support moving forward. So the charts look good short term, backed by Morgan Stanley, and so let's see how things pan out going into the end of the year. Thanks for watching. Subscribe. Please like the video.